Here's a question I had when I first got started as an FBA seller. Is there a minimum dollar value of sales I have to reach before I have to start collecting tax? I didn't want to run into any trouble with state tax laws, but by the same token, I didn't want to get stuck in the middle of unnecessary tax filings. I found tons of answers on Google. However, based on my research, it seems as though the technical legal answer is that there are no minimums. And I didn't like that answer for my small growing business. Thankfully, my friends at Peisner really simplified it for me. Here's what they said. It's not practical, nor does it make economic sense to register in a bunch of states and start collecting taxes when your sales volumes are still low. Basically, they recommended that I should start when I met 3 conditions in a state. 1, I have Nexus there. 2, my product is taxable there. And 3, my liability would be material if a state found out about me. They also simplified the Nexus rules for me. Now I can see why most FBA sellers have Nexus. It's the inventory and other services Amazon performs for me. Once I knew where I had Nexus, it was time to determine if my product was taxable. Basically, in most states, any item of tangible personal property is taxable. However, some products could be exempt in certain states, such as clothing or food. In my case, not everything I sell is taxable in every state. Don't worry, the team at Peisner can clear this up for you. The next step is to examine materiality. Just because a state says you're required to collect sales tax doesn't necessarily mean it makes sense to do so. Again, Peisner to the rescue. We worked out a plan for each state when it would be appropriate to get registered. Peisner sure helped me, and I'm sure they can help you too. Just remember, Nexus, taxability, and materiality. Good luck! Get in touch with the Peisner team today for further help.